Welcome back to Bitcoin for Everyone, an original Coin Academy course. This is the third lesson of 8, and in this lesson we're going to be looking at different ways in which you can use Bitcoin. The most obvious use is to spend Bitcoin for goods and services. There are now more than 35,000 merchants who accept Bitcoin, including some very big names out there, including Expedia, Google, Dell Computers. You can even buy a car at Tesla Motors. Virgin accepts it for airfares as well. There's a wide number of vendors today who accept Bitcoin. Moreover, that number, 35,000, actually underrepresents the Bitcoin ecosystem, as it doesn't take into account all of the various freelancers, developers, designers, programmers, and contractors around the world who you can pay directly with Bitcoin. Now, of course, another common use, we turn this around, you can become a merchant yourself and you can accept Bitcoin for goods or services. There are several merchant solutions already in the market. These are complete point-of-sale solutions and solutions that integrate with e-commerce websites. Two of the biggest are called BitPay and Coinbase. You can see their logos on the screen. They offer very attractive terms. Coinbase offers no fees for the first $1 million in transactions. BitPay offers a completely free plan for small businesses and a more advanced plan with additional features for less than $1 a day. It's actually quite attractive, and these are not the only solutions in the marketplace. Transactions are processed almost instantly, and both Coinbase and BitPay will convert your Bitcoin value into fiat currency and deposit it in your bank for you. Now, these solutions are pretty much North America specific. If you're living outside of or operating outside of North America, you'll need to research and find out what's available and what will interface with your local bank and operate in your chosen fiat currency. But there are significant advantages aside from the fact that the transaction fees are quite low. There are also no chargebacks. Once a Bitcoin transaction goes through, it's done. Unlike credit cards, where some credit cards will allow the users up to 30 days to reject a charge and incur, therefore, a chargeback. Really a large issue, particularly for people in the food and beverage industry. And these solutions, both BitPay and Coinbase, they offer a variety of software plugins you can stick into your website and integrate with your website shopping cart, really making it a turnkey solution for accepting Bitcoin for payment for your goods and services. But buying and selling are not the only ways that you can use Bitcoin. You can also trade it like a foreign currency. It is a currency, so this shouldn't come as a surprise to anybody. There are multiple exchanges in the marketplace right now, and you can buy and sell Bitcoin on those like a commodity or like a currency. Bitcoin is more volatile than the major currencies, and this opens up possibilities to buy and sell at a profit. Moreover, the pricing often varies between exchanges, making it possible to buy and sell on different exchanges for a better margin. Typically, the lower volume exchanges will allow you to purchase Bitcoin at a lower price. Why? Because they don't have the volume to command the higher prices closer to the market rate. This allows you an opportunity to purchase on these exchanges and then to sell them on a different exchange. You can do this because once the Bitcoin is in your possession, it doesn't matter what exchange it was obtained on. You're not restricted in where you can sell. Another alternative is to use it to move between fiat currencies. Basically, you're using Bitcoin as an alternative to the US dollar or the euro when you move between exotic currencies. Typically now in exotic currency transactions, it's the US dollar or the euro that serves that role. It's very simple. It works like this. You've got currency A and you wish to move to currency B, but your bank doesn't provide a direct translation from currency A to B. You would have to go through the US dollar or the euro. Well, another alternative is you take currency A, you go to an exchange, you buy Bitcoin, and then you go to a different exchange and you take your Bitcoin and you buy currency B. Now, this does have a big advantage, namely that the transaction costs are cheaper than they are with traditional methods. It can also be actually faster than traditional methods. The big disadvantage here is Bitcoin price volatility has to be taken into account. You don't want to conduct the transaction on one day, wait several days, and then conduct the second transaction. You might be disadvantaged by the volatility. Then again, it might be to your advantage as well. Another alternative is to use Bitcoin as a hedge against inflation. Basically, if you live in a country that has an unstable economy, or more specifically, you have a currency that is deteriorating in value through inflation, the government's printing more money, the value of the money is dropping, you can change some of your local currency into Bitcoin as a way of storing value and hedging against inflation. Basically, it would look something like this. Your local currency is dropping in value across time. Instead, you take part of that money and you buy Bitcoin, and the Bitcoin will at least hold the value, or more likely, given the history of Bitcoin, it will actually rise in value, giving you a hedge against the inflationary factors in your local market. This is particularly attractive in some of the smaller third world countries right now where currency volatility is a big issue. Finally, you can, of course, treat Bitcoin as an investment vehicle. Now, Bitcoin is a deflationary currency. What do we mean by that? We mean that since the supply is limited, Bitcoin should increase in value over time. Unlike a fiat currency where the government can go out and print more dollar bills or more euros, we know how many Bitcoins there are in the market. We know how many Bitcoins there ever will be in the market. Therefore, it's a fixed supply. And it means, consequently, that as trading volume increases and demand for Bitcoin increases, the value of that unit is going to increase. This opens up the possibility that you can hold Bitcoin like a stock, a buy and hold approach, and use Bitcoin as a unit of stored value. Of course, given the track record to date, good gains are possible, but always caution is advised. And this actually is a good segue for our next lesson, which is all about investing in Bitcoin. So join us next for Lesson 4.